Good evening. This is the Elliott wave update for the S&P 500 for Sunday, May 15th, 2022. Friday's trade being an expiration was very much in line with what I would expect. And where it fell in terms of the Elliott count also fit very cleanly. And so the market actually ended up putting in a lot of things in place and then giving us pretty much our marching orders or what we can expect for the beginning of the week, but what it all will end up turning into. So let's kind of just dive right in here and see if we can unpack some of this and keep this a little bit shorter than the longer dissertations that I tend to make. To begin, on this larger scale, on the daily chart for the S&P, that we continue to form an intermediate third wave down. Inside that intermediate third wave, there will be 5 waves of minor degree. That's what needs to form in order to complete the intermediate third wave. Now, understanding the building blocks is what's going to really be helpful here, because we need 5 waves of minor degree to complete the intermediate third. Within the 1, 3, and the 5 of that minor degree sequence down, there will be 5 waves of minute degree. And so now we're inside the minor third wave. So what I've done is gone back, and if you remember last week, I switched it around. And wasn't the change in the view, it was just updating and showing in real time how both the alternate and the preferred go hand in hand until the market makes things a little bit clearer and I can jump back to actually what has been the preferred. The preferred continues to show that minor wave 1 completed at 41.36, minor wave 2 completed at 43.03. And now what we did do, because coming down to 48, let me see what that low was, 55 on the 12th, so on Thursday, or Wednesday, no, Thursday, that low put in it did mark 5 waves down from 43.03. And taking a step back, then to put it into perspective, that then the preferred count, the preferred view took over and came in with 1, 2, and 1. So again, we remain in that process of that larger third wave being in progress and these subdivisions within it. And because it is a large intermediate degree third wave down, and as we know under Elliott, the third waves are normally the longest and the strongest out of 1, 3, and 5 within an impulse move. So we've got that all lined up. And now we're looking at it in progress. And it is unfolding. And it is not untypical. What makes it untypical is how the algorithms continue to strike out to find a bottom. They feel we've reached the low. They feel like things really going to turn up, et cetera, et cetera. And that continues to tell me that we're moving into it. And I think we're going to get ready to drop in it again. But we're in that period where it's like, were we in it and a point of recognition? Yes, because we're inside that third wave down, the 3 of the 3. But now it's subdividing again. So we're going to go through an additional point of recognition. And that'll be the 3rd of the 3rd of the 3rd. And we don't want to go higher than that. So it's going to be the minute third of the minor third of the intermediate third. So again, point of recognition, what happens? We get this. But now we're inside that a little bit larger minor wave. So it comes again, but it's going to have the same impact, the same structure in terms of going down, the same tenacity, the same push for it going down. And again, dropping into the hourly chart, we can see that we had our moments. In fact, there's a lot of green on that screen, but those downside moves were powerful. So I don't want to keep it on the daily, which just says down, 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 just hang on, don't worry, because there were plenty of blasts to the upside. That's the difference. That's what starts to throw in our head fakes. But being that the algorithms are coded by us humans, and when they're told to go buy something at the market, and it's a large number, and it's across several hundred component stocks within an index, it's going to move. It's going to move. And that's kind of what took over. And it was expiration, et cetera, et cetera, et cetera. So we got this blast off of that low. We got this start to what ultimately is going to end up to be a decent run higher. But on the way down, it will break just as quick. It will start to collapse with more fervor than we now have seen, because we keep narrowing it down, and we narrow that focus into not necessarily the eye of the storm, because it's not going to be calm. It's like, that's what we're kind of experiencing right now, this eye of the storm. Oh, we're done. And we rise up, but we don't see the back wall coming. We don't see it. And all of a sudden the winds will start to pick up, and we're like, still don't see it, but we notice there's a change in the weather. And then something's going on, but we still don't see it. Then bam, that storm will hit and it'll knock everything lower. In the meantime, I still think that the Elliott is showing us that we likely have some additional upside to do. Now, in the NASDAQ, it's a little bit cleaner that this was an A and a B, and we could be in that C wave. Whereas here on the on the S&P, it's not quite that cut and dry, because we do have this larger drop that we put in. And so I'm not sure. I still have to take it off of this low, the 38.55 low, for our point. And that, in which case, here we could be seeing this was the A, this was a B, a very quick B, and now we're into the C wave up. That could be the case for the S&P. A little bit different, but I probably could run it also for the NASDAQ, because they run neck and neck, because folks, it still is the same 7 huge tech titan stocks that are not manipulating, but moving in both directions, the S&P and the NASDAQ, because of how they're weighted, because of how the thought process behind all this seem to just mirror one another. And so when you get Apple and Amazon and Google, which has twice, Google, both A and B, or Google L and then Google A, you've got Facebook, you've got Microsoft, you've got Tesla, all sitting in both and sitting up there trading very actively and moving around incredible, a lot. Okay, so what can we look for in terms of upside to complete this C wave, or to complete this wave 2? If we have a minute wave 1 here, we're looking for a minute wave 2, it should be an ABC. Could this be an A and a B, and now we're in the C? If so, next up to bonk its head against is going to be the hourly 200, which is at 4,051. Now, break there kind of clears the path a little bit. Notice, as we come up, nothing out there. We got to go back. Okay, we have to go back a week or so, but still, it kind of makes it more free reign to get itself up to Fibonacci 0.382, which is at 41.34. Then, if indeed for a wave 2, we're kind of looking for this guy to get up here, 42.21 to actually 4,300. That possibility does sink in, but I'm going to disqualify it on the basis that wave 1 began at 43.03. So this one's out. These become the prime candidates to control and turn the S&P lower. A move here pulls the count back out to a much larger type of the picture, and then we're moving, our resistance levels up quite a bit. So no, I'm not looking for that right now. I am looking for the market to start to wane on this upside push. Like I said before, nothing has changed. We're just sitting in the eye of the storm, and nobody's really seeing that back wall. And they'll start to pay attention when winds pick up. They'll start to pay attention when the roof starts to kind of lift a little bit. Then it'll be like, oh, there is a storm. Oh, the storm's not over. Oh, here we go again. So too many things are still out there. Nothing has changed, except we got a little bit of a relief. We needed to relieve the oversold. We needed to breathe some life back into the market, and that's exactly what it's doing. But this is quite normal. This is how markets move. We're just putting it into context via Elliott wave. And now we should get a little bit more strength here. We've had a strong week last week, strong downside. And now we're going to get the upside, and we should, and then revert. That's where I'm going to leave it. Now, on the downside picture, if we reach a resistance level and it does end up completing the 5 or the 5th, whether it's here or here or here, the turn should be quick, swift, and hard. So again, it's going to be related to something that's happening in the geopolitical, something that's happening around the world. In our own country, I believe that we're kind of in a lull in terms of news, which could be coming out next week. But, you never know. You never know what could kick the selling back into gear, or just the fact that it's going to get kicked back into gear. There's enough out there to do that I would expect it to be solid and to start to break. Now, on the hourly chart, no matter where it is, you're going to look like it's going to turn all of this around. Right now, we still got that hourly 50 providing the resistance. The 4 and the 8 start to move above it. The 20 starts to move above it. It's really going to give it a lot of power to get itself up to this 382 and this 50% level. Those are just retracements, fib retracements. But the breaking of those moving averages above the 200 continue to provide a positive push to the market. The 50 getting up there puts the hourly chart in alignment to continue higher. So bear in mind, that's what everybody will be looking for, to start to see it all the way up to the hourly, to fall into alignment with the smaller time frames that we are turning higher. I don't see that, but that's what you'll be looking for should it occur. So therefore, if it does happen, we're not totally surprised, because it's like, oh, they got them up there. Oh, the market will now go higher. Trust me, on a day-by-day basis, the market continues to tell me what the Elliott count is. I just put the labeling on it and then give you what the best process for moving forward, what it will look like. All right, I am going to stop there. Continue to use those moving averages. They work on whatever time frame you're working off of. Then they remain the same. And when they break and when they line up, it carries the same message. Whether you're using it on a 30-second, 1 minute, 2, 5, hourly, daily, they all carry the same message on the breaks. And also continue to use the Fibonacci. It works. It has the same when they're lining up with moving averages and Fibonacci. You get a little bit of a double kiss there for what is about to take place. All right, that's it for today. Our next update will be on Monday, the 16th.